Right, let's just dive right into this explainer and completely demystify the Malaysian tax administration system together. Because whether you're an individual earner or a business owner, navigating compliance can be kind of tricky. So today, we're mapping out exactly how filing works, what your deadlines are, and crucially, what rights you actually have.
We've organized this taxpayer journey chronologically. We'll be looking at the Malaysian tax system, filing your tax returns, the different types of tax assessments, penalties for noncompliance, and finally, the tax appeal process. Section 1. The Malaysian tax system. Knowing the baseline.
Okay, so the authority running the show here is the Inland Revenue Board of Malaysia. You probably know them as LHDN. They handle income tax, petroleum income tax, and real property gains tax. But here is the absolute crucial takeaway for how they operate. Malaysia uses a self-assessment system. This means you compute your own tax liabilities, file your returns, and make payments without immediate LHDN intervention. The responsibility for accurate reporting, that falls directly on you or your business. LHDN is not holding your hand through the math here. They expect you to get it right from the get-go.
Section 2. Filing your tax returns, deadlines, and methods. Now, there is a massive difference in deadlines depending on who you are. If you're an individual, go ahead and circle April 30th on your calendar. That is your hard, absolute deadline for the following year. But for companies, it's a bit more fluid. Their deadlines actually float based on their specific financial calendar, so they're required to submit within 7 months from the end of their own financial year. When it's actually time to hit submit, you basically have two pathways. You can go the traditional route with manual submission, literally physically dropping off completed forms at an IRBM office. Or you can take the modern, much faster route, e-filing, through their dedicated online platform. And, most people are shifting to e-filing these days just for the sheer convenience of it. So what exactly are you filing? Let's cut through the alphabet soup of tax forms really quickly. If you're a resident individual just earning a standard salary without any business income, you use Form BE. But if you have business, side hustles, or you run a sole proprietorship, you upgrade to Form B. Companies use Form C. And if you employ others, you've got to file Form E, the employer's return, detailing your employee's remuneration, and that's due by March 31st. Beyond those initial forms, you might run into a few other scenarios. Your first submission is your original return. If you miss the deadline but submit it anyway, that becomes a belated return. And heads up, that almost always comes with penalties. For companies whose income projections change dramatically mid-year, they can file a revised estimate or Form CP204A in their 6th or 9th month to adjust their tax installments. And finally, if you're leaving Malaysia for good or closing up shop entirely, you file a final return. Things actually get pretty interesting when we look at married couples, because you have a choice. You can elect a joint assessment where you combine both incomes and assess them under one spouse's name. Sometimes this really saves money. However, a separate assessment is often highly beneficial if both spouses have significant incomes. Why? Because it allows both individuals to maximize and claim their own separate personal tax reliefs. Section 3. Types of tax assessments. The consequence of filing. So there are 3 main types of assessments. Because it's a self-assessment system, most of your returns are automatically classified as deemed assessments. Under the law, the second you submit it, it's accepted as official without an immediate review. But don't let your guard down. If LHDN audits you and finds mistakes or underreported income, they can issue an additional assessment. And they've got a really long memory. They can issue this up to 5 years after the assessment year ends. Finally, if you just fail to submit or provide incomplete info, they use a best judgment assessment. This is where the IRBM literally estimates your chargeable income based on whatever information they can find. And trust me, you do not want them guessing your income. Here's the absolute golden rule to take away: the timeline. Once you receive any assessment notice, the clock starts ticking immediately. You have a strict 30-day window to pay it. You can do this securely online through IRBM's eBayaran portal or physically at designated banks. Section 4. Penalties for non-compliance. High stakes. Let's say you submit your return, and then, you realize you made an honest mistake. You are allowed to submit an amended return within 6 months from the original filing deadline. However, any additional tax you owe because of that amendment will be hit with a mandatory 10% penalty increase. So it's a small price for honesty, but it still stings. But it gets significantly worse if you simply file late. Depending on how long you delay your submission, those penalties are going to skyrocket. The IRBM can hit you with penalties ranging from 20% all the way up to a whopping 35% of your total tax payable. And if you actively attempt to falsify your records, you're moving way beyond mere percentage penalties here. You are entering the realm of severe legal trouble. The sources are incredibly clear on this. Falsifying records triggers substantial fines and potential imprisonment. The risk is literally just not worth the perceived reward. Section 5. The tax appeal process, your legal recourse. Let's end on an empowering note. If you receive an assessment from LHDN that you firmly believe is wrong, you absolutely have the right to fight back. But before you draft that appeal, you need to know this absolutely crucial caveat. Filing an appeal does not suspend your obligation to pay the assessed tax. You still have to settle that disputed amount within the original 30-day window, regardless of your ongoing legal challenge. If you win the appeal later, you'll be refunded.
Now, you can't just appeal because you don't feel like paying. You need solid, specific grounds. Common reasons include factual errors in the assessment, think incorrect calculations, or maybe they misclassified your income sources. You can also appeal if you believe the IRBM has misinterpreted or misapplied tax laws to your specific situation, or if you fundamentally disagree with one of their established public rulings. Finally, if new relevant evidence surfaces after the assessment was issued, that is also perfectly valid grounds for an appeal. So here's exactly how you execute that appeal. Step 1, you've got to submit Form Q to your relevant IRBM branch within 30 days of receiving the notice. So say you receive a notice on June 1st, Form Q must be submitted by July 1st, detailing exactly why you disagree. Step 2, the IRBM then has a full 12 months to review your case, and they might ask you for extra receipts or documents. Step 3, this whole thing ends in either a mutual agreement where the assessment is adjusted, or, if you still disagree, the case gets elevated to a formal hearing before the Special Commissioners of Income Tax, or SCIT. But hey, life happens. If a sudden medical emergency or an unexpected out-of-country trip causes you to miss that initial 30-day window to file Form Q, all is not lost. You can actually submit Form N to request a late appeal extension. But be warned, you absolutely must provide documented, valid reasons for the delay, and it's entirely up to the IRBM's discretion to grant it. Ultimately, navigating this entire life cycle successfully, from filing accurate returns to surviving potential audits and winning appeals, comes down to one fundamental habit: meticulous record keeping. The burden of proof is always going to be on you. So I'll leave you with this provocative thought to chew on. If the IRBM issued an additional assessment to you tomorrow, could your current files easily prove them wrong? If not, it might be time to get organized. Thanks for joining me on this explainer. Keep learning, stay compliant, and we'll see you next time.